I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Airbnb and DoorDash boost their price ranges ahead of their public debuts this week. At the high end of the range, DoorDash's valuation would be double where it raised funding in June. We're going to take a look at how investor appetite is shaping up. Plus, could Salesforce and Slack catalyze a wave of consolidation in software? Box CEO Aaron Levy says Slack will be to Salesforce what Instagram was to Facebook. He'll join us this hour. And Apple is planning a new set of chips designed to outperform Intel, what it means for the next generation of Macs, and more. All of those stories in a moment, but first, U.S. stocks dropped Monday amid a surge in cases of COVID-19. We are expecting to hear more about vaccine distribution as states start to outline the doses, how many they will get, and when. Let's get to Bloomberg's Abigail Doolittle with the latest on how it played out in the markets. Abigail, break down the day and what's to come this week.
Well, Emily, it was an interesting day because recent Mondays we've had big gains on positive vaccine news. And of course, this week the vaccine will start to be distributed in the UK. There's some expectation that will happen here next week. But we had a bit of a down day, at least for some of the indexes, the cyclical indexes. Where we had strength, though, was the NASDAQ 100 and the other tech-heavy indexes. In fact, putting in new all-time highs. The NASDAQ 100 up a ninth day in a row, its longest daily winning streak going all the way back to December of 2019. And that strength, Emily, Tesla, unbelievable. This stock up 7.1%, continuing to soar right into when it's going to be included in the S&P 500 on December 31st. It is now a $600 billion company. It is up more than 660% on the year. It's really just incredible. One question is, will there be sell the news action on December 21st once it's finally in the S&P 500? And then we also had strength out of vaccine maker Moderna. Netflix, it's interesting, up 3.5%. There's no news there, but there could be some anticipation around the new lockdown, such as the one that you're experiencing in California, that Netflix may see more subscription growth. Now, you were talking about those IPOs coming up this week. It's been a strong IPO year, a banner IPO year, one of the best in since 2014 and then perhaps even 1999. More recently, the IPO ETF is tracking this action up 25%. And of course, as you were mentioning, Airbnb is set to go public Thursday. They recently raised the IPO range, pricing range, suggesting that there's very strong demand there. Their valuation may hit $42 billion once public. DoorDash going public on Wednesday. They also upped their range. There's other names such as Affirm Holdings, Roblox, ContextLogic. So this is not just a big IPO month, Emily. This is expected to be the record December for IPOs. So really pretty incredible, especially given the fact that what we have going on this year. But if you take a look at two recent IPOs, two of the biggest, Snowflake, they did IPO. Palantir, of course, did the direct listing. These stocks, since going public back in September, are up more than 200% despite the uncertainty. But again, you have to ask the question, is that because conditions are so strong, or is there a possibility that some in the know think that the window could close in 2021, or at least early 2021, if conditions get a little bit more difficult? Something to think about, but lots of green for these IPO companies, Emily.
We're not just going to think about it. We're going to talk about that right now with our IPO reporter, Bloomberg's Abigail Doolittle. Thank you so much for that update. For more on the IPO pipeline, as Abigail mentioned, December set to be the busiest year-end on record for IPOs in the United States, with DoorDash and Airbnb expected to start trading this week in long-awaited listings. Both companies aiming to raise a combined $6.2 billion. That is if they price at the top of their ranges. For more, I want to bring in Bloomberg's Crystal Z. All right, Crystal, we're expecting DoorDash on Wednesday, Airbnb on Thursday. What do we know?
We know that they have both seemingly gotten really good response. That's why they have upped their range. Airbnb today announced that they are going to go for a higher range, and DoorDash did the same thing late last week. And we know that they are planning to price and trade this week. But then the valuation, this is probably not the highest that they could go, because due to looking at the regulations, they can still price 20% above what they already have. So we could potentially see an even higher number for both companies.
It's certainly incredible to see Airbnb in this position after such a difficult year, the pandemic bringing travel to a standstill. $42 billion at the high end of the range would be, fairly in line with some sort of uplift given what they saw on the private markets. DoorDash is an interesting story, doubling their valuation to what they saw in a funding round just 6 months ago. How did the numbers back that up?
Yeah, DoorDash pitch here is that, because of the lockdown, they really have benefited. Like, we cannot deny that they are, because of the suburban footprint, they are a beneficiary of COVID. And, there are more lockdowns coming up. So it looks like DoorDash's run could continue. And that is how they're justifying this valuation of as high as $35 billion in the IPO. But then the same argument can go for Airbnb, because they are at a low right now. And if you buy into the IPO, you could potentially see that when travel resumes, when the vaccine comes, which is, I guess, potentially in the near future, you can see the Airbnb shares go up substantially. So really, you can have like both sides of the story, both based on where we are in the pandemic cycle, I guess. But this is right now, we are seeing that both of them have really exceeded expectation, and they have a significant increase in their compared to their previous private valuation.
Interesting. And it seems like next week things aren't going to slow down. We're also looking ahead to Wish, especially on the tech IPO pipeline in particular, as well as Affirm possibly before the end of the year.
Yeah, Wish filed today, launched today actually with their IPO under their parent's name, ContextLogic. It's a discounted online retailer. Again, COVID beneficiary and, $17 billion valuation, not a small company for one that's, just about to go public. And we are expecting Roblox, which is an online game company, and then Affirm, which lets online consumer pay for goods in installments. So these are all like consumer-facing internet companies. We're expecting all of them to come before Christmas. Hopefully things quiet down a little bit at Christmas. We think there will be some stuff coming between Christmas and New Year's, because it's the busiest December ever.
All right, Bloomberg's Crystal Z. I can't believe we're going to be seeing IPOs between Christmas and New Year's, but it has been a year unlike any other in so many different ways. Thank you so much, Crystal, for that update. Meantime, some big news out of Uber today. The ride-sharing service selling its self-driving car division to Aurora and taking a stake in that startup. This in exchange for investing $400 million in Aurora. Uber will get a 26% ownership stake in the company. Sources say the deal will value Aurora at $10 billion and create a larger competitor to the leader in the field, Alphabet's Waymo, and certainly it's a big surrender for Uber, which had made a big bet on self-driving cars. Coming up, we hear from Box CEO Aaron Levie on the mega deal that is Salesforce plus Slack. That is next. This is Bloomberg. Demand for the cloud has rocketed in 2020 amid schools closing and workforces going remote. In the last week's mega deal with Salesforce and Slack, I spoke to both company heads for their take on what the deal means.
You said it right. It's a marriage made in heaven.
The key message here is that there is an opportunity for something that's non-linear.
This idea that you can have this next generation work from anywhere environment, runs on my phone, runs on my iPad. Amazing what is possible for me here.
Many people are looking at this as a defensive move against Microsoft. What's your response to that?
Well, you can see Salesforce has really never been stronger.
Personally, I'm sick of talking about Microsoft.
Stuart Butterfield not holding back there for more on the deal and what's to come in software. I've got Box CEO Aaron Levie, who has called Slack Salesforce's Instagram, as Instagram was to Facebook. Aaron, why do you describe it that way?
Well, I think there's a lot. That's obviously an imperfect analogy, but the main point was I think this is one of the most important M&A deals that we've certainly seen in many years and at least ever maybe in enterprise software. I think Slack joining forces with Salesforce is going to completely transform this part of the industry around the future of work and productivity software. I think what Slack really brings Salesforce is this modern operating system for knowledge work, where you can connect the front office, the back office, your customers, their partners, and have a common interface to be able to communicate and collaborate across all those different experiences. So I think it's very transformational for Salesforce. I think it's exciting for Slack. And I think it's great for the rest of the software ecosystem, where Slack is really an open platform that more software can plug into and create new experiences for customers. So I think it's pretty exciting all around.
Does it mean we'll see more consolidation in 2021 in this space?
I think it's certainly putting a bigger spotlight on, what does the future of work look like, and all of the software surrounding the future of work. I think it's putting a bigger spotlight on the future of data and workflows across these platforms. So I would anticipate certainly more M&A going into next year. I don't know if it's an unusually high period relative to other periods. I think that what we're actually just seeing is more general awareness that enterprise software is bigger than ever. The markets are bigger than ever, and there are more disruptive platforms than ever. And so that just causes a bit of a frenzy where companies do want to join forces and be able to go after these markets in a bigger way.
But I wonder if, given that we're seeing potentially record multiples, the market keeps going up, if that slows the consolidation down.
So certainly, certainly you have to be in a position like Mark Benioff, where he's able to make long-term bets on market trends and be able to certainly pay the kinds of premiums that are necessary out there. And Mark is uniquely able to do that. He's called these trends correctly in at almost every single stage, if not every stage of the cloud. So the market is really willing to I think go along with those kind of bets. Not everybody can do that, and I think to that point that might be a one point of friction for these types of consolidations in the future. But overall, I think what this is a bigger signal of is just, again, how big these markets are. Even when we think about today in either the US or other key markets for enterprise software, we're probably only about 10% of the way penetrated when you think about modern software like Slack. So you still have this significant portion of knowledge workers around the world that need to be using these modern tools, that will be using these modern tools in the future. So for as far along in this journey that many of us are in, and these kinds of companies have progressed on, we're still very early in the total potential of the market.
What do you make of the competitive threat of Microsoft? You heard Stuart there saying he's sick of talking about it, but it seems like the threat is real.
Well, I think in Stuart's case, Slack is a very different kind of product than some of the other competitive tools out there. Slack's really an open platform for bridging together different software, different communication with partners and external vendors and internal employees. So there really isn't a perfect kind of one-to-one comparison where Slack has built something that is completely unique and disruptive, where customers do use it in a different way. And I think, again, the recognition of the market is that Slack plus Salesforce is able to now go after this market in a much bigger way. And I think that we have to sort of think about this market not in the maybe typical zero-sum way that maybe some other industries have evolved, where if one company wins, another company loses. I actually think the markets are so large that we're going to see growth from most segments of software in the coming years, simply because of how much of the world still has yet to be digitized. The amount of business processes that haven't gone digital yet, the amount of workloads that are still in legacy data centers that are going to move to the cloud, the amount of knowledge workers that are going to be using digital technologies to do their jobs in the future. For all of these reasons, we're still in the very early days. So I don't think we're going to see the same level of head-to-head competition that maybe it seems like.
That said, Slack has made the contention that Microsoft is anti-competitive by bundling some of its features with the Office suite. I'm sure this is something that Box has been exposed to as well, but is that a complaint that you would make in the same way?
Well, I think we're still very early in this idea of, what should the regulatory environment look like for big technology, both consumer and cloud. And, obviously we've seen a lot of the attention happen in the consumer space. What I think is going to happen is in the next, few years, and you need certainly a stable environment in the US political system to be able to accomplish this. We probably need to create what are the modern, rules of the road for the cloud and for the internet, and for software that's delivered over the internet. And I don't know if it's something that looks like net neutrality, but for cloud computing, where you do have certain rules around interoperability, and the kind of choice that customers can have. But we are still in the early stages of trying to figure out what types of regulations and what kind of approaches do we have to open marketplaces in the internet age. And we just are very early in trying to define what that looks like.
Now, we were just talking about how it's been or becoming a record year for IPOs. Shocking when it seemed like the world was going to end 6 months ago. Curious how you are preparing for 2021, given that, we're going to be, obviously will be a new administration, a new environment, potentially a vaccine. It's hard to understand why markets keep going up and companies keep going out of the gate, but they do.
Well, I think, certainly for the kinds of companies emerging publicly right now, whether it's the recent IPOs like Snowflake or the upcoming IPOs like Airbnb or DoorDash or others, I think it's, again, a reflection of certainly the excitement around digital technologies and the markets that these companies play in, and the fact that they've been, building out fairly disruptive platforms for, in some cases, over a decade. And there's a lot of interest and a lot of excitement around what that future of these industries are, whether it's the future of big data, the future of hospitality, the future of e-commerce and food and grocery and delivery. So I think what you're seeing is just a significant appetite on the part of the public markets, for who are the winners in the future economy where things do move more digital. There's obviously a large amount of capital that's available for investing in these types of businesses. So it's you have to obviously appreciate, given interest rates, where dollars are going to be going in terms of where do you get growth from those dollars. So that's also a factor that's playing out. But I think going into next year, obviously it would be great to have the vaccine rolled out as quickly as humanly possible. Really be able to open up the economy even further, obviously in a safe and healthy way, and really,
right.
see what things are now kind of back to normal and what things have been transformed forever. And we're going to see a lot of those things that have been transformed forever.
We shall wait and see. Aaron Levy, CEO of Box. Very interesting to see what 2021 brings us, as always. Okay, thank you so much, Aaron. Coming up, $1 trillion. That is how much the global economy is losing due to an increase in cyber attacks. But that's not the only impact of this type of crime. The CTO of McAfee will join us next to talk about what is at stake and how companies can stay ahead. This is Bloomberg. As people around the world continue to work from home on often less secure networks during the pandemic, the cybersecurity firm McAfee says it is seeing a large increase in the frequency and the severity of cyber attacks on businesses. In a new report titled "The Hidden Costs of Cybercrimes," they find that cybercrime now costs the global economy more than $1 trillion, jumping more than 15% in 2 years. Joining us now for more, McAfee Senior Vice President and CTO, Steve Grobman. So how do you get to that number, $1 trillion?
So, Emily, it's really about looking at all of the indirect costs that impact cybercrime, everything from opportunity cost, brand reputation, impact to employee morale. If you add up all of those costs, as well as the cost to secure environments, that's where the model that CSIS, whom we partnered with on this report, got to that staggering $1 trillion number.
So how does the activity you're seeing now compare to, let's say, last year this time, given that we're all working from home, so many people are schooling from home, and so much more of work is distributed?
So there's a few things. First off, on the working from home, it basically creates soft targets for the cyber criminals. You can think of everybody working from home is now being partially their own IT department. They're working on home networks, they're using consumer devices, and that makes it easier for cyber criminals to get into an organization. we're also seeing the cyber criminals attack differently. They used to attack a system or a device. Now we see them taking over an organization, which makes it a lot more difficult and more expensive to know when they've fully been removed.
In cyberspace, the attacks are sometimes coordinated or happening in parallel to things happening at the government or geopolitical level. Is there anything in particular that you believe a new and incoming administration should be on the lookout for, given the state of where we are right now in cyberspace and mid-pandemic and still no vaccine yet actually on the market?
Absolutely. So one of the things that the report goes into is many countries fail to enforce cybercrime laws. In some cases, such as North Korea, we actually see that the state itself is conducting cyber criminal activity to pay for things like their nuclear program. As part of the new administration, being able to have a discussion where a zero tolerance policy for cybercrime occurring within a country is key, and also setting new norms, making it clear that no government should tolerate theft of things like intellectual property, which is really critical to our industry in the tech sector.
So, McAfee is now a newly public company, got bought by Intel, then went public again earlier this month. Talk to us about what your priorities are going into 2021.
So in 2021, it's all about having a comprehensive defense for both the consumer and the enterprise markets. So in the consumer space, we're having to protect the entire digital life of a consumer. It's not just about protecting their PC, but also working with them everywhere that they go, if they've been part of a digital breach, if they're using other devices. On the enterprise side, it's about recognizing all of the new technologies. So as organizations move to the cloud, having strong cloud defenses. As we're working from home, having good cloud edge defense capabilities. It's putting all of that together. And as we've seen from this report, the problem statement is just a staggering challenge, and McAfee's right there to be part of the solution.
All right, McAfee CTO Steve Grobman, thank you so much for joining us. Appreciate you stopping by. All right, coming up, Cloudflare unveiling a new set of controls that allow global companies to keep data secure and compliant with local law no matter where they do business. An exclusive conversation with Cloudflare co-founder and CEO Matthew Prince. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Cloudflare is launching a new product today, the Data Localization Suite. It is the world's first globally distributed network with regional controls, which gives companies control over where their data goes and who has access to it, no matter where they do business. Joining us now for an exclusive conversation is Cloudflare co-founder and CEO Matthew Prince. So Matthew, break this down to lay business person's terms for us. What does this mean if you're a business who uses your suite?
What I think is important to start with is what happens with the typical cloud infrastructure. So if you are summoning a car service or ordering something from your favorite e-commerce site, even if that service or e-commerce site is using the cloud, that data is going back to one location in the world. And by and large, that's going back to somewhere like Ashburn, Virginia, or the Dales in Oregon, or a very limited set of where data is stored. And what is happening is that consumers are getting fed up and governments are getting fed up with all of that data getting sent back to these limited set of regions around the world. And so they've passed rules that say, if you're a business going forward, you need to store the data of your customers in the jurisdictions where those customers live and work and reside and use your service. And you can't transfer it back to Ashburn, Virginia. And the problem is that creates a real challenge for businesses, because up until now, there hasn't been a cloud that allowed you to do that. And so what we are launching with the data localization suite is a way to use Cloudflare's network and keep the data of your customers in the regions where those customers live in order to comply with what is an increasingly complicated set of regulations around the world.
So will this change, day-to-day business practices or how I experience my favorite businesses' products?
Well, I think that what you're seeing from businesses themselves is that they have a lot of pressure from regulators. And we saw this with TikTok, which had pressure from the Trump administration to keep data about US citizens in the United States. We saw this with Facebook, which has said that they will actually pull out of Europe if they have to not send data about European citizens back to the United States. And so over time, what we believe is that the businesses that are going to best comply with these increasing regulations are going to use a service like Cloudflare in order to make sure that their consumers still get a great experience. They can still get the efficiencies of the cloud, but they can comply with what are these increasingly complicated data localizations and data sovereignty regulations all around the world.
How does GDPR and potentially incoming privacy legislation in the United States impact this effort?
So about 76% of countries around the world already have or are about to pass privacy regulations. Nearly 2/3 of the world's population is already covered by some privacy regulations. So it's not just GDPR. The Singapore government, the Japanese government, the Brazilian government, the Indian government are all saying you need to, as a business, store customers' data local within our jurisdiction and keep it there. And so that creates a real problem for businesses that are trying to be global. And we heard this from our customers over and over and over again. And so that's what inspired us in order to launch this product.
Now, what does this mean for Cloudflare? Obviously, this is good business for you as well, but does it give you an edge that your competitors aren't offering?
I think that most of the traditional public clouds that you think of, the AWSs, the Microsoft Azures, the Google clouds, were built for a world where it was okay to send all that data back to some central location. And what we see from our customers is that they want to, again, comply with these increasingly complicated regulations. And because Cloudflare's network today already spans more than 100 countries around the world, we are in a unique position to help our customers and help businesses wherever they're operating, make sure that they can service their customers wherever those customers are.
You're also getting a lot of data coming in about Black Friday, Cyber Monday, how folks have been shopping over the last few weeks. You've seen that Cyber Monday was in fact bigger than Black Friday. Talk to us about the trends and how they might be different this year compared to last.
Traditionally, the sort of general thought was that Cyber Monday was when people went back to work and they sat down during their lunch break and they bought things on e-commerce sites, whereas Black Friday was where we all went out and stood in line to go to the Walmart or Target to buy whatever the latest deals are. And so we actually anticipated that wouldn't change all that much this year, but it was surprising that this year we actually saw less e-commerce shopping on Black Friday and more on Cyber Monday, whereas in previous years, Black Friday has really dominated Cyber Monday. And so we're seeing the shopping season shift much more, we think, towards e-commerce, and that e-commerce season be spread out over a longer period of time. All of last week was just a record-breaking amount of e-commerce traffic from everything that we could see across our network.
Now, in your view, is this year just going to be an odd year, or are these trends here to stay? Will next year, this time, look similar to this year, given new habits that are being formed?
No, it's really hard to say what's going to happen when we go back. I'm looking forward to shopping in person, whereas I in the past have been a very much an e-commerce shopper myself. But I think that now that consumers have learned that they can get groceries online, that they can get holiday gifts online, that is putting a lot of additional load on the networks to make sure that they can accommodate that. And at Cloudflare, we're making sure that our systems are standing by and ready to stand up to whatever this Christmas holiday brings.
Now, what are you, Matthew, as a business leader, how are you planning for 2021? We're seeing this burst of IPOs at the end of the year, IPOs that are going to happen between Christmas and New Year's. Going into this pandemic, Sequoia, the venture capital firm, called COVID the black swan of 2020 and, warned all of these businesses to lock down. But For so many tech companies, it's been a bigger year than ever. How are you preparing for next year?
I think it's been interesting to watch what's happened since the pandemic. So the pandemic really hit in most of the world the very end of Q1. In Q2, we saw definitely a harder time for our sales teams to close new business, but our ability to expand with our existing customers was very, very strong. Q3 saw new businesses starting to realize that this transition that we've made towards remote work is here to stay. And so we actually feel like there's a real strength in that transition. What the pandemic has caused is not a radical rethink of how we work, but it's just accelerated trends that were already happening. And so we see strength in the core shift to the cloud for services that Cloudflare provides going into Q4 and into next year. I think the main thing that we're thinking about is how exactly do we think about coming back to work? By the time we get to July, when we think that our offices can be fully back open and people coming back in based on everything that we're seeing, more than half of Cloudflare employees will have never worked a single day in a Cloudflare office. And so we're trying to think about how that's almost like a combination of both. Go ahead.
I just said, wow, that is pretty incredible. And it's really interesting to hear how you're working to keep all of those employees engaged and feel like they're part of something bigger, even though they've maybe never met their colleagues. We'll have to leave it there. Cloudflare co-founder and CEO, Matthew Prince, thank you so much for joining us. All right, coming up, Cisco is buying cloud company IMI Mobile for over $700 billion. We're going to speak to Cisco SVP Jeetu Patel and what that means for the companies, and also look ahead to their WebEx One event tomorrow. That is next. This is Bloomberg. Software and cloud companies have moved front and center over the last year. This amid businesses scrambling to move their workforces online in schools across the nation, going to distance learning. But as a vaccine nears and workers and students return to the building, uncertainty lies ahead for the collaboration industry. Joining me now, Cisco Vice President, Senior Vice President, and General Manager of Security and Apps, Jeetu Patel. Jeetu, Cisco starting off today with a couple of new acquisitions that'll round out your portfolio. Talk to us about what these companies mean.
Emily, thank you for having me with you. And we are excited about both these acquisitions. There's two that we announced today. One was IMI Mobile, and the second one is Slido. IMI Mobile is largely the customer experience as a service space. Look, both you and I have probably been at a point where we've called a call center at some company after we've made a purchase, and we're really frustrated because they keep transferring us from one department to the other, and you have to keep repeating your account number, and it's a long hold time. It's a friction-filled experience, and that's what we're trying to go out and solve with this business in the contact center business, and that's where we think that IMI Mobile is going to completely help us, change the way that the customer experience actually evolves over time. So that's one area that we've made the investment. The second area is Slido, which is a company which is in the audience engagement platform, where imagine you're in a room with 10,000 people, but you want to still make sure that they're interacting with you as a presenter. Slido allows you to do that by making sure that you can post questions. You can make sure that you upload the questions, so there's like a real good interaction and interactivity with the audience. So even if you're in broadcast mode, it feels like you're engaging in a very intimate conversation with people.
Cisco's WebEx, meantime, has certainly had a moment this year, but so have a lot of other video conferencing platforms. There are a myriad of rivals out there. Zoom, in particular, of course, stands out. Has WebEx held its own over the last year? What trends are you seeing?
We feel like we've held more than our own over the course of the past year. Look, we've actually seen an 8x increase in our video volume. We've seen, we are now over 600 million people on a monthly basis that are using our service. 85% of the Fortune 500 end up using our service. 9 out of 10 financial services institutions use our service. So there's actually a fair amount, governments, education institutions, 7 out of 10 governments, 8 out of 10 educational institutions that are the top educational institutions use our service. So there's a fair amount of increase in volume. And what we had thought was at the beginning of the COVID crisis, we had seen some spike and we thought it would actually then flatten out. And in fact, we haven't seen that at all. We've seen it keep going up. And we're having record month after record month. And it's actually been pretty remarkable to see the amount of demand of new customers as well as existing customers that are using it more and more.
Your big WebEx One event is tomorrow, but as I said, it's an increasingly crowded field. What are you going to announce tomorrow that is a game changer?
Yes, we have our first of a kind future of work event called WebEx One that's going to be tomorrow and day after. For those of you that haven't registered, go to webx1.com and register. And we're going to announce, 3 major areas of huge amount of innovation. The first one is in the just productivity and well-being space. How do people stay productive, but also reduce the amount of fatigue, reduce the amount of stress, and all of the kind of things that go with working from home that get to be very stressful. We want to try to see if we can ease that for people so that they can stay productive without actually feeling hugely stressed and fatigued. The second area is going to be around a massive investment we're making in a partner ecosystem. So all of the, if you think about Salesforce and ServiceNow and Box and Dropbox and Facebook, all of these players and many, many more, we're going to be integrating the WebEx experience into their products and vice versa, so that regardless of the application that the user is using, if the customer is invested in those SaaS applications, we want to make sure that we can have a world-class integration with those applications. Interoperability is really important. So that's an area that we're going to be making a huge amount of investment. And then the third area is in devices. We are very lucky to have a portfolio of not just software, but also devices and tying those together. And so we will have, a set of magical experiences. Think of us more like Apple, where we'd actually be the Apple of the video conferencing area, where we'll actually have our software and hardware that gets very, very tied together. So you have magical experiences that can be delivered.
Interesting. The Apple of the video conferencing era. We'll be watching the event tomorrow. Thanks so much. Cisco Senior Vice President, General Manager of Security and Apps, Jeetu Patel. Now, in more deals news, software has been bigger and bigger. The opportunity with the quick shift to work from home and amid the pandemic. Bloomberg senior deals reporter Ed Hammond caught up with a big investor in the space, Thoma Bravo managing partner and founder Orlando Bravo. The buyout veteran talked about his reaction to
I've been absolutely surprised. We investors, we get taught to be overly conservative rather than overly optimistic. So we were going through all the things that could happen. And we were drawing some parallels to 2008. No LP commitments, or very few, very little capital deployment, and corporations not investing, freezing their budgets. That was the terms that they used back then. This time, it was totally different. Both LPs were willing to take good risks, and corporate buyers of our software products were leaning forward as well and making investments.
One thing that is kind of interesting about this cycle is how much of the software market, a market where obviously you play significantly, how much that has heated up. There's significant interest there. Valuations are extraordinarily high. How does that impact a vehicle like Thoma Bravo when you're thinking about investing, and indeed when you're thinking about the return profiles of some of the investments you make?
Well, see, this is a really good environment for Thoma Bravo, because what happens is with the scale that we have now, we can do the same thing that we've done over the past 20 years, but at scale. That gives us the opportunity to buy the number one player in each market, the leader that is growing over 20% compounding every year. And the most important thing is our strategy is an operational one. We're not in the business of buying high and trying to sell higher. That's a short-lived strategy. What we do is we try to partner with the best operators that are running these companies. We only work with existing management. And then we put a set of principles in place to take those companies to a level that they didn't think it was possible. What we're looking to do now is take $5 to $10 billion market cap companies or valued companies and get them to 30 or 50 very quickly. If you look at our recent deal, Ellie Mae, We bought that company for 3.7 billion. 18 months later, we sold it for 11 billion. And our peers and some people in the industry have asked us, how did that happen? It happened by building fundamental value. We backed the same team, but at the beginning, the company had 20% margin and was growing at 10%. And 18 months later, we had 60% EBITDA margins and we were growing at 30%. And
but
the
Orlando,
market price.
Isn't it exactly situations like that, where, as you say, you sort of had this incredible turnaround in a very short space of time? Isn't it situations like that that mean this is a great market to be selling in for Thoma Bravo, but actually to go out and acquire at, 14, 15 times or whatever the multiples on a lot of these software assets are right now, it's very, very difficult to then make the return profile that you and your investors want you to make?
The most important thing, though, is not the price going in these days. This is a market of growth. So it's a market of low leverage relative to your total capital structure, given the price and the entry price that you have to pay in. But it's a market where the growth opportunities are so much bigger because these companies are all cloud, they're all recurring revenue, and they're solving problems that are 10 to 20 times bigger than the problems that were being solved 10 years ago. So when you get that right and you do what we call innovation done right from an operating standpoint, you can make a wonderful return in this market.
Do you think the leverage aspect of private equity, and by that, of course, I mean the traditional private equity model of buying companies, putting on a lot of debt, and then sort of exiting them and having juiced returns, do you think that's going to be a thing of the past? Just bearing in mind, what happened to a lot of those companies that were heavily indebted going into this crisis?
The leverage multiples have remained the same really since 2005, with the exception of the financial crisis. What has changed is the quality of the businesses, all recurring 80% margin in our space, the size of those companies, and the growth rate of those companies, which partly explains the valuation increase. Making money through leverage, particularly in tech buyouts and in software buyouts, is a thing of the past. Financial engineering is a thing of the past. The way to make money, and the way we've done it, is really through operations.
Bloomberg's Ed Hammond there with Orlando Bravo, Thoma Bravo founder and managing partner. All right, still ahead, Apple aims to outrun the chip industry's top player, and that is Intel, with new processors that could come as soon as spring. All the details next. This is Bloomberg. Let's get to Apple now. The iPhone maker is planning a series of new Mac processors for introduction as early as next year, aimed at outperforming Intel's fastest chips. For more, I want to bring in Bloomberg's Mark Gurman, who of course covers Apple for us. So Mark, where does the state of Apple's chip efforts stand vis-a-vis Intel?
Hi, Emily. Thank you for having me. So right now, Apple has 3 computer lines with this new M1 processor. And these have chips that are in line with the highest-end iPads and are in line with some mid to high-range Intel processors for their laptops. And those just launched a few weeks ago in the MacBook Air, low-end MacBook Pro, and low-end Mac Mini.
So how does this compare to what Intel has to offer? And I mean, could this be a move towards, really damaging Intel's legacy in this entire industry?
Yeah, I mean, one of the core aspects of chip design, chip power, is how many cores you actually have. And the more cores you have, the more tasks you can do at once while keeping the machine at, top speeds. And right now, Apple's chip is 4 cores for big cores, which are the more powerful cores, and 4 high performance, and then 4 low performance, high efficiency, so 8 cores total. These new ones across 2021 and into 2022 will go up to 16 and even 32 cores. And that compares to the highest end Mac Pro, Apple's most expensive Intel Mac, only having 28 cores. So they're really going to beat them out in terms of performance for sure, based on those numbers.
How will other computer makers react to an aggressive 2021 lineup from Apple?
Yeah, I mean, you see Apple pushing the ARM specification. That's the underlying tech that drives these chips, whereas Intel uses x86. Right now, it seems that other computer makers are probably going to take a look at moving to that same underlying architecture as Apple, given how far ahead they're going to see them going ahead of Intel in the coming years.
And then we've just got about 30 seconds left. What about graphics? What does it mean for NVIDIA? What does it mean for AMD?
And so we're looking at graphic speeds for the highest end Apple computers topping 2 to 3 times faster with new Apple graphics chip compared to what you're seeing from AMD as well as NVIDIA and PCs happening in the next year or two as well.
All right. Bloomberg's Mark Gurman, always all the info for us. Thank you so much, Mark, for that update. Something we'll continue to follow going into next year. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Bloomberg Daybreak Asia coming up next. This is Bloomberg.